Hey everyone, welcome back to Corporate Decoder. Today, Fidelity Concord Street Trust just filed their N-CSR shareholder report, and I'm seeing a lot of fascinating details about several of their funds. Quick note, this is not financial advice, just my take on public filings for educational purposes. We're going to dive into the financial health and strategic moves of these funds, focusing on what the numbers actually tell us. So, this filing is a certified shareholder report for registered management investment companies. Essentially, it is a look under the hood at how these funds performed over the last year, which ended on the 30th of April 2026. The company we are looking at is Fidelity Concord Street Trust. This report covers a bunch of their different funds, and we'll be picking out the most interesting bits. We're seeing annual shareholder reports for several Fidelity funds here, all as of the 30th of April 2026. It is like getting an annual performance review for each of these investment vehicles. Let's start with the Fidelity Small Cap Stock K6 Fund. For a hypothetical $10,000 investment last year, the costs were around $71, which is about 0.60% of that investment. This is a pretty low cost, especially for a fund focused on smaller companies. The report mentions that US stocks had a strong gain this past year ending April of 2026. This was pushed by excitement around artificial intelligence, strong company earnings, a tough economy, and importantly, the Federal Reserve started cutting interest rates starting in September of last year. So, a big picture of the market was pretty positive. However, despite the positive market, this particular fund's performance suffered a bit because of its security selection, particularly in the industrial sector. This means the specific stocks the fund chose within that sector did not do as well as the benchmark index, which is the Russell 2000. Looking at specific stocks, the big detractor was actually an overweight in CBIZ, which dropped by 55%. This is a stock that the fund had a large position in, and its poor performance really dragged down the fund's overall result compared to its peers. On the flip side, stock picks in the consumer discretionary sector were the biggest boost to performance. This means the fund did a good job picking winners in that area, offsetting some of the losses elsewhere. Now, let's look at the long-term performance. For this fund, the life of the fund covers the period from May 25, 2017 through the 30th of April 2026. An initial $10,000 investment would have grown to $23,489. That is a pretty solid return, showing growth over several years. Looking at the average annual returns, the fund delivered 37.16% over the last year, 7.07% over 5 years, and an impressive 10.03% over its life. While the market indexes like the Russell 2000 also did well over the year. The fund's 5-year and life of fund returns are strong, especially considering the choppy market conditions those longer periods likely encompassed. Let's check out some key statistics as of the 30th of April 2026. The fund size is about $18.3 million. This is actually quite small for a mutual fund. The number of holdings is 140, which suggests a decent diversification within the small cap space. The total advisory fee is $99,072, which is a decent chunk for a small fund, but the portfolio turnover rate is high at 185%. This means they're actively trading, buying and selling stocks quite a bit, which can lead to higher costs and potentially impact returns. In terms of where the fund invested, information technology is the largest sector at 20.1%, followed by industrials at 18.8% and financials at 13.1%. This is interesting because the report mentioned industrials and financials as detractors, yet they are still significant holdings. The top holdings are Sanmina Corp, EI's Holdings Inc., and Fabrinet. EI's Holdings was specifically called out as a top performer, so it makes sense it is a large holding. Sanmina was also mentioned as a key holding and a detractor, highlighting the impact of volatile small cap stocks. Next up, we have the Fidelity Small Cap Stock Fund. For a $10,000 investment last year, the costs were $101 or 0.86%. This is slightly higher than the K6 fund, which is typical for standard share classes versus institutional ones. The performance drivers here seem very similar to the K6 fund, which is not surprising as they are likely managed with similar strategies. The report again highlights the strong US stock market driven by AI enthusiasm, corporate fundamentals, a resilient economy, and Fed rate cuts. Again, security selection in industrials is pointed out as a primary detractor. It is clear that picking the right smaller industrial companies was a challenge for the fund managers this period. Just like the K6 fund, an overweight position in CBIZ was the main detractor. This reinforces the idea that their strategy led to significant single stock risk that didn't pay off this past year. And once again, consumer discretionary stock selection was a major contributor to beating the benchmark. This suggests the managers have a good hand in identifying opportunities in that sector. Looking at the past 10 years from the 30th of April 2016 to the 30th of April 2026, a $10,000 investment would have grown to $25,798. This is a solid long-term performance, showing resilience and growth over a decade. For average annual returns, we see 35.50% for 1 year, 6.27% for 5 years, and 9.94% for 10 years. These are all respectable numbers, showing consistent if not market-beating performance over the long haul. The 10-year return is slightly below the S&P 500 index, which gives us a clue that perhaps focusing on small caps is what is driving the differences in longer-term returns versus larger cap indices. Key fund statistics as of the 30th of April 2026 show a fund size of $1.28 billion. This is a much more substantial size compared to the K6 fund. The number of holdings is 140, similar to the K6 fund, and the portfolio turnover rate is 159%, also indicating active trading. The advisory fee here, $9.9 million, is also a significant number reflecting the larger fund size. Sector allocation is led by information technology at 20%, followed by industrials at 18.4% and financials at 12.9%. The commentary on detractors in industrials and financials versus the portfolio allocation makes me wonder if they are strategically holding through some challenges, hoping for a rebound in those areas. Top holdings include Sanmina Corp, EI's Holdings Inc. and Fabrinet. Again, Sanmina and EI's Holdings were mentioned in the performance commentary, making their inclusion as top holdings understandable. Moving on to the Fidelity Small Cap Discovery Fund, FSLCX, the cost for a $10,000 investment last year was $76, or 0.66%. This is a bit lower than the standard Fidelity Small Cap Stock Fund, which is a good sign for investors focused on costs. The performance narrative here is quite similar to the other small cap funds. US stocks had a strong year, but security selection in industrials and healthcare acted as detractors. This hints at a consistent theme in Fidelity's small cap approach, where challenges in specific sectors can offset overall market gains. The report points to a non-benchmark stake in Genpact as a major detractor, which makes it interesting that they increased their position in what was a significant holding. This is a common theme in active management where conviction in a name can sometimes lead to larger losses when things go wrong. Conversely, consumer discretionary stock selection was the top performer, matching the trend we've seen across these funds. This suggests a core strength in that particular sector for these managers. Over the past 10 years, a $10,000 investment would have grown to $24,772. This is a solid return, showing good compounding over a decade. The fund size here is $2.2 billion and the portfolio turnover is a much lower 64%, which might reflect a slightly different strategy or perhaps a more concentrated approach compared to the other small cap funds we've looked at. Sector allocation shows industrials at the top with 21.8%, followed by information technology at 19.5% and healthcare at 14.6%. This is a bit different from the K6 fund, with industrials taking the lead. Top holdings are Sanmina Corp, EI's Holdings Inc., and Old National Bancorp. Sanmina and EI's holdings reappear here, suggesting they are key players in the manager's small cap strategies across different funds. Now, let's look at the Fidelity Series Small Cap Discovery Fund, FJAX. This fund seems to have a unique cost structure with total advisory fees reported as $0. This often indicates a fund designed for specific institutional channels or where fees are covered elsewhere. The performance story here is again very similar, a generally positive market, but challenges in specific stock selections, especially within industrials and healthcare. The report highlights non-benchmark stakes in Genpact and Kyndryl holdings as key detractors. And as expected, consumer discretionary stock selection was the biggest win. It is clear that this sector has been a reliable source of outperformance for Fidelity's small cap funds. Over the past 10 years, a $10,000 investment would have grown to $27,280. This is a strong long-term result, and given the $0 advisory fee, it suggests a potentially very efficient investment vehicle. Key fund stats show a fund size of $1.96 billion, which is quite substantial. The number of holdings is 159. The turnover rate is 71%, which is moderate. The fact that the total advisory fee is $0 is the most striking number here, making this fund potentially very attractive for cost-conscious investors. Sector allocation is led by industrials at 21.7%, information technology at 19.5%, and healthcare at 14.6%. This diversification across sectors is typical for a discovery fund aiming to capture growth across various industries. Top holdings are Sanmina Corp, UI's Holdings Inc., and Old National Bancorp. Again, familiar names appearing across several Fidelity funds, reflecting a consistent approach to identifying companies believed to have growth potential. Let's switch gears to the Fidelity Series Small Cap Core Fund, FSLX. This fund also shows $0 in total advisory fees, similar to the series Small Cap Discovery Fund. The performance commentary echoes the broader market trends and sector-specific challenges. US stocks performed well, but security selection was a key factor, especially in industrials and communication services. An interesting contrast here, the top contributor was a non-benchmark stake in Lumentum Holdings, which gained over 800%. However, the fund sold this stake at period end, suggesting a potential realization of gains or a shift in strategy. This highlights the dynamic nature of active management, where identifying and exiting positions at the right time is crucial. On the downside, picks and an underweight in materials were detractors. This implies the managers either missed out on gains in materials or made poor stock choices within that sector. This fund has a shorter life, starting the 4th of November 2022. For a hypothetical $10,000 investment, it is currently valued at $16,149. This shows positive growth in a relatively short period, indicating good performance since its inception. The 1-year return is a very strong 48.45%, and the life of fund return is also impressive at 14.73%. These figures suggest a strong start for the fund, and the zero fees make this even more compelling. Key statistics show a fund size of $1.6 billion, a solid amount. The number of holdings is higher at 227, suggesting broader diversification. The portfolio turnover is 62%, which is moderate. Again, the $0 advisory fee stands out. The sector allocation is led by industrials at 19.5%, information technology at 16.8%, and financials at 16.5%. This broad diversification across many sectors is typical for a core fund aiming for stability. Top holdings include Wise Holdings Inc., Bloom Energy Corp Class A, and Fabrinet. Wise Holdings and Bloom Energy appeared in previous discussions about small cap funds, reinforcing their importance in capturing growth opportunities. Now, let's check out the Fidelity Mid-Cap Stock K6 Fund, FNKFX, for a hypothetical $10,000 investment. The costs were $53 or 0.45%. This is very reasonable as it is a K6 class fund which typically has lower expenses. Again, a strong US stock market is noted with AI enthusiasm and Fed rate cuts being key drivers. Security selection in industrials, particularly in capital goods, and an overweight in energy were cited as contributors to relative performance. A major positive contributor was an overweight in Sienna, which surged 641%. The fund reduced its position in this stock, likely to lock in gains. That is a smart move. However, consumer discretionary stocks acted as a detractor, which is an interesting contrast to the small cap funds where it was a winner. This could indicate a different approach to the mid-cap space or simply a different environment for those specific stocks at the mid-cap level. This fund has a life of fund performance from the 13th of June 2019. A $10,000 investment grew to $23,314. This shows solid growth, especially considering the relatively short time frame. The 1-year return is 34.23%, 5-year return is 10.08%, and life of fund shows 13.08%. These are all very strong returns, suggesting good performance against both indices and benchmarks. Key fund statistics show a fund size of $1.38 billion, holdings are at 182, and the portfolio turnover is a very low 38%. This low turnover suggests a more buy and hold strategy, which often correlates with lower costs and potentially more stable performance. The advisory fee is $5.3 million. Which is appropriate for the fund size and services offered. Sector allocation is heavily weighted towards industrials at 27.9%, followed by financials at 13.1% and information technology at 12.8%. The high allocation to industrials makes sense given the commentary about its positive impact on performance. Top holdings include Flex Ltd, TechnifMC plc, and Imperial Oil Limited. These are all well-established companies and hint at a more stable, core holding strategy compared to what we saw in some of the small cap funds. Next, we have the Fidelity Mid-Cap Stock Fund, FMCSX. The cost here for a $10,000 investment was $73 or 0.62%. This is a typical expense ratio for a standard share class in an actively managed fund. The performance commentary again points to a strong US stock market, but also highlights security selection in industrials and energy as positive contributors. However, consumer discretionary picks and an underweight in information technology were detractors. This shows the potential for different sector dynamics between mid-cap and small-cap fund strategies using similar management principles. An overweight in Ciena was a huge win, contributing to performance. The fund actively decreased its stake in Ciena, which is a common strategy after significant gains. On the other hand, consumer discretionary was a detractor here, just like in the K6 fund. This reinforces the idea that mid-cap strategies might have different sector performance drivers than small-cap ones. Over the past 10 years, a $10,000 investment grew to $33,245. This is a very strong long-term result, outperforming the S&P Midcap 400 index. The 1-year return is solid at 35.19%, the 5-year is 10.15%, and the 10-year is an excellent 12.76%. These numbers show consistent outperformance over the long haul. The fund size is impressive at $8.75 billion, making it a large cap fund in the mid-cap space. Holdings are 183, and the turnover rate is a relatively low 35%, suggesting a more stable approach. The advisory fee is $46.7 million, which is proportionate to the fund size. Industrials lead sector allocation at 29.4%, followed by financials and information technology. This aligns with the performance commentary, indicating a strategic focus on these sectors. Top holdings include Flex Ltd, Space Exploration Technologies Corp, and Imperial Oil Limited. These are large established companies, fitting with the mid-cap focus and lower turnover. Now, we have the Fidelity Mid-Cap Stock Fund, Class K, FKMCX. The cost here for a $10,000 investment was $64 or 0.55%. This is a K6 class fund, showing slightly lower expense ratios typical for these share classes. The performance explanation is very similar to the regular Fidelity mid-cap stock fund. Strong US stock market security selection in industrials and energy were positive, while consumer discretionary and information technology were detractors. The performance data for this fund is identical to the Fidelity mid-cap stock fund, as expected given they are essentially the same fund with different share classes. Finally, let's look at the Fidelity large cap stock K6 fund, FCLKX. The costs for a $10,000 investment were $54 or 0.45%. This is very competitive as a K6 fund. The market narrative is consistent. Strong US stocks driven by AI, fundamentals, and rate cuts. Security selection was a primary contributor, especially in industrials, financials, and information technology. A significant positive was an overweight in GE Vernova, a top holding. They also benefited from avoiding Berkshire Hathaway, which underperformed. The biggest detractor was an underweight in information technology. This is a key sector for large cap growth, so missing out on its gains would hurt relative performance. A non-benchmark stake in SAP was also a detractor. Looking at the life of the fund from May 25, 2017, a $10,000 investment grew to $37,279. This is outstanding performance, significantly outperforming the S&P 500 index over that period. The 1-year return is an exceptional 40.52%, the 5-year is 16.72%, and the life of fund return is 15.86%. These numbers are very impressive and show strong results for this fund. The fund size is $173 million, which is modest for a large cap fund. Holdings are 181, and the turnover rate is incredibly low at 18%. This very low turnover suggests a highly concentrated portfolio with strong conviction in long-term holds. The advisory fee is $503,901. Which is reasonable for managing this asset level. Information technology leads at 24.2%, followed by industrials and financials. This is a common large cap composition with a strong tilt towards growth and value sectors. Top holdings are Nvidia Corp, Boeing Co, and Microsoft Corp. These are all mega cap tech and industrial giants, confirming the large cap focus and a strategy that embraces well-established, dominant companies. The fund mentioned changes to its principal investment strategies during the reporting period. This could be a reason for differing sector allocations or top holdings across funds, even within the same company. This filing also includes details on fees paid to the accounting firm Deloitte and Touch LLP. For the 8 funds listed, the total audit fees for the 30th of April 2026 were over $370,000. This is a standard expense for such large investment companies. The fees are broken down into audit fees, related fees, tax fees, and all other fees. It is interesting to see audit-related fees and tax fees are quite substantial for some of the funds as well. Deloitte entities and PwC billed over $17 million in aggregate non-audit fees for services rendered to the funds and fund service providers in 2026. This indicates a significant amount of work beyond the primary audit, possibly related to regulatory compliance, consulting, or other assurance services. The Audit Committee has strict policies for approving all services provided by the independent registered public accounting firm. This is a crucial oversight function to ensure auditor independence when providing both audit and non-audit services. Now let's look at the financial statements for the Fidelity Small Cap Stock K6 Fund. As of the 30th of April 2026, the net assets are $18.3 million. The fund size is relatively small, which aligns with what we saw earlier. Investment in securities is at $20.1 million, which is actually more than the net assets, indicating that liabilities are significant, including $1.8 million in collateral for securities on loan. For the year ended the 30th of April 2026, the fund had a net investment income of $54,327. However, the net gain from investments was much larger, at $4.9 million. This highlights that for many funds, the primary driver of net asset growth comes from capital appreciation, not just income generation. Looking over the financial highlights, the net asset value per S-share at the end of the period was $6.34. The total return for the year was a strong 37.16%. The expense ratio is consistent at 0.60%, showing good cost management for an actively managed fund. The notes to financial statements provide crucial details. For instance, the fund is part of the Fidelity Concord Street Trust and primarily available to employer-sponsored retirement plans. It also details investments in Fidelity Central funds, which are essentially internal money market funds, and explains their valuation policies. Importantly, noting that level 1 inputs were used for most of their valuations, meaning they are based on quoted prices in active markets. The independent auditor, Deloitte and Touch LLP, states that the financial statements and highlights present fairly, in all material respects, the financial position of the fund. This is the standard clean audit opinion we'd expect to see from a registered public accounting firm. The distribution section is important. It shows that the fund designated $1.7 million as a capital gain dividend for the year. Shareholders will receive tax information in early 2027 for their 2026 tax returns. Switching to the Fidelity Small Cap Stock Fund, its financial statements paint a slightly different picture. The net assets are a much larger $1.28 billion. Investment in securities stands at $1.37 billion, again showing significant liabilities including $81 million in collateral for securities on loan. For the year ended the 30th of April 2026, net investment income was $1.1 million. However, the net gain from investments was massive at over $350 million. This really emphasizes that gains from selling stocks are the dominant factor in performance for this fund. The financial highlights show a net asset value per S-share of $20.38 and a total return for the year of 35.50%. The expense ratio here is 0.86%, which is a bit higher than the K6 fund, likely reflecting the service and distribution fees associated with a standard share class. The notes provide similar organizational and investment information, but importantly, they detail the management fee structure. For this fund, the basic fee rate is 0.82%, and the realized gain on investments of over $200 million is very significant. The report also details significant book tax differences primarily from foreign currency transactions. Deloitte and Touch LLP also issued a clean audit opinion for this fund, confirming the fair presentation of its financial position. Distributions are considerably higher here, with over $161 million designated as capital gain dividends. This is significantly more than the K6 fund, which is expected given the larger asset base. Looking at the investment details, the market sectors are led by information technology at 20%, industrials at 18.4%, and financials at 12.9%. This is very similar to the K6 fund, confirming a consistent sector strategy. Top holdings include Sanmina Corp, EIS Holdings Inc., and Fabrinet. Again, seeing familiar names, the report also shows a substantial amount of money market funds at over 7%, indicating a portion of the fund is kept in readily available cash. Finally, the Fidelity Small Cap Discovery Fund FSERX. The costs for a $10,000 investment were $76, or 0.66%, also a standard fee for an actively managed fund. The performance narrative aligns with the others, with strong US markets but sector-specific headwinds. Notably, Non-benchmark stakes in Genpact and Kyndryl holdings were identified as detractors, while consumer discretionary was a strong contributor. Over the past 10 years, a $10,000 investment grew to nearly $25,000, showing solid long-term growth. The fund size is large at $2.2 billion with 159 holdings and a moderate portfolio turnover of 64%. The advisory fee is also $0, which is truly remarkable and certainly would have significantly boosted net returns for investors. Sector allocation shows industrials at 21.8%, information technology at 19.5%, and healthcare at 14.6%. This broad diversification is typical for a strategy that aims to discover growth opportunities across various industries. Top holdings include Sanmina Corp, UI's Holdings Inc., and Old National Bancorp. These reappear as key investments, suggesting conviction in these names across different funds. Then we have the Fidelity Series Small Cap Discovery Fund, FJAKES, which, like the Series Small Cap Core Fund, has $0 advisory fees. This is particularly noteworthy for an actively managed fund. The performance commentary here is largely consistent with the other funds. Generally positive market conditions, but security selection challenges in industrials and healthcare. They did note a non-benchmark stake in Genpact as a detractor, while consumer discretionary was a positive contributor. This fund's life of fund performance, starting the 14th of February 2019, shows a $10,000 investment growing to $27,280. This is excellent long-term performance, particularly given the low expense ratio. Annual returns are 32.24% for 1 year, 7.41% for 5 years, and 10.56% for its life. These are strong numbers, especially considering the zero fees. The fund size is $1.96 billion, with 159 holdings and a moderate turnover of 71%. The zero advisory fee is the standout statistic here, offering significant cost savings to investors. Sector allocation shows industrials highest at 21.7%, followed by information technology and healthcare. This aligns with the fund's growth-oriented strategy. Top holdings are Sanmina Corp, UI's Holdings Inc., and Fabrinet. These companies are consistently appearing across Fidelity's small-cap funds, suggesting a core group of high-conviction investments for the managers. In conclusion, these Fidelity filings give a comprehensive look into their various equity funds. We see a consistent narrative of a strong market performance in 2026, but also the inherent challenges of active security selection, particularly in smaller and mid-cap sectors. What is particularly interesting are the Fidelity series funds with zero advisory fees offering compelling value. The key takeaway for investors is to understand the specific strategy of each fund, its sector allocations, and how its performance compares to the benchmark, especially when considering the cost structure. Many of these funds showed strong long-term returns, while the newer ones are off to a solid start. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives.